SoftBank in hindsight made one critical error and only one. And everything else was sort of a fait accompli with that one error, which is that in their fund documents, they made this a 10-year fund. Now, let me explain. Why is that an error? That is the status quo for all these funds. And the more nuanced part of that decision to make it a 10-year fund is that your investment period is only 5 years. So you're only allowed to put the money in for the first 5. And then you have to basically manage the portfolio because there's an expectation that you raise a new fund. So if all of a sudden you have $100 billion in a 5-year investing life, the math says, oh my gosh, okay, well, I need to put 20 billion out per year. And then you try to look for, I don't know, let's say 50 companies a year. Well, the mean check size now all of a sudden balloons to 400 million. That was the error. You see afterwards, the very, very smart private equity folks who saw that that was the error fixed it. So Blackstone, Silver Lake, when they came on the heels of SoftBank, what they did was they raised funds with a 15 and 20-year life. And what that allows them to do, and what it would have allowed Masa to do in this situation, was just slow it way, way down.
Pace yourself.
And do fewer deals with much more capital, and then be patient and say, I'm going to have a 10-year investing life. And I think that that would have saved them. And they would have looked incredible right now because they would be the kingmaker in a moment where there is no money flowing into venture and early stage tech. So in my opinion, I think it was just that it was such an ambitious feat that when it came time to execute, whoever was really in charge of those details kind of fucked it up. And they should have realized the math didn't work for a 5-year fund life. And they should have made it a 10-year fund life or 10-year investment life, which would have put a 20-year fund life on the thing. And I think they would have been fine.